Now let's look at the factors affecting your dividend decision. As we discussed earlier, the important part for dividend is your earnings. So the first point is your amount of earnings. The dividends that you pay is directly proportional to the amount of earnings that you have. Another important aspect is your stability of earnings. It's important that these earnings are continuous and not fluctuations, so that you can consistently declare your dividends. And the next one is obviously your stabilizing the dividends per share. Correct? Because the company's aim is to stabilize the dividends per share. And when they'll do this is that they have a confidence that their future growth potential is there. Correct? Only if they feel that the profits will be consistent over a period of time, they'll think of stabilizing the dividends per share. The next one is your growth opportunities. So when I say growth opportunities, companies that generally feel they have a good growth aspect will need some money for their investment. This is in the form of retained earnings. So naturally they'll declare less dividend. So growth companies generally declare less dividends. Your next point is your cash flow position. So when I say cash flow position, naturally you should be thinking about your AS3. If you think of your cash flow from financing activity, dividend is an outflow of cash. So it's important that companies have cash profits so that they can meet their dividend obligation. Because what happens is company might be generating profits, but it need not be in the form of cash. It can be non-cash profit. So companies have to see if they have cash profits to pay out their dividends. The next one is your stock market reaction. Whenever there is a declaration of dividend, the share prices react to it. It is seen as a positive move and the share prices increase. So this is a very important factor when the companies decide on declaring dividends. The next one is your shareholders' preference. Generally, the companies will take into mind the opinion or the views of the shareholders. A few shareholders depend on dividend as a regular source of income. So they can keep this in mind and declare dividends consistently year on year. The next one is your taxation policy. So generally in India, according to your Income Tax Act, if you see, the companies pay something called as a dividend distribution tax, and the shareholders, this income in the form of dividend is completely exempt. They don't pay any tax. At the same time, what happens is that a company, the interest is tax deductible. So the company will be motivated to borrow debt. Correct? But at the same time, debt is riskier. So companies tend to declare dividend even if it means that they have to pay more tax. And also the shareholders prefer more dividend. The reason being that it is exempt from the tax. Agree? Okay. So the next one is your access to capital market. For example, let's assume there is a very large company, right? It can easily access the capital market. There is no need for this company to retain some profits with itself for investment. So this company will pay higher dividends compared to a very small company. So this is with respect to your access to capital market. And the last 2 points. One is with respect to your legal constraints. For example, the Companies Act 2013 lays some restrictions on the payment of dividend. So this is to be taken into consideration while you pay your dividend. The last point here is your contractual constraints. Sometimes what happens is that when you borrow a loan from a bank, they can lay down certain restrictions on the amount of dividend that you can pay to your shareholders. This is to be considered so that you are not going against the regulations laid down by them. So can we recall all the points that we saw from the beginning? What is the first one? Amount of earnings, stability of earnings, stability of dividend, growth opportunities, cash flow position, and then shareholders preference, taxation policy, access to capital market, stock market reaction, legal constraints, and your contractual constraints. So all these are your dividend decisions. I hope you have understood. Thank you.